welcome to this edition of Startup Central. I'm Avanne Dubash. We've got lots lined up over the next half hour, and if you want to connect with us, please do reach out on suc@etnow.tv. Well, let's then start off the show by bringing on board Sanjay Swamy. He's managing partner at Prime Venture Partners. We're here to discuss the emergence of a potential Delaware-like gift city in India, whether or not we have the potential for that, funding trends, key portfolio bets, and which sectors look good. Thank you so much, Sanjay, for taking the time out and joining in. And I'm just taking off from a recent article that you've written with respect to gift cities and essentially whether or not we can see a Delaware-like island, really being created in Gift City back home, and what that would mean for startups.
Hi, Avanne. First of all, Happy New Year to you and to all your listeners. It's great to be on the show, so Prime, we've been an early stage investor for the past decade in India, and several of our companies have done pretty well. I'm sure names like Wheelseye, MyGate, Neo are familiar to several of the viewers and many others. Over the course of the last 10 years, we have been, of course, doing our part in the ecosystem to try to to move the overall ecosystem forward, and interacting with several people, not just in India but around the world. And I think one of the challenges that has, at least from an intent perspective, been something the government has wanted to address is the whole question of ease of doing business in India. And while it is certainly better and moving in the right direction, and there are several initiatives trying to improve that, I think we're seeing some new jurisdictions. And I was recently on a trip to the Middle East, and Abu Dhabi is starting to emerge as a very aggressive preferred destination for startups to domicile in, right? From a global perspective. And historically in India, startups have always had to make this decision of, should I incorporate and domicile myself in India, which should be the default, or should I domicile myself in Delaware or Singapore? And while the latter might seem like attractive options, the reality is that the country loses out when startups are incorporated overseas, right? Whether it is from a from a flow of funds, whether it is from a eventually when the startups are successful from a taxation perspective. And so seeing how the world is starting to court startups and try to create very attractive jurisdictions for them, I was looking at Gift City in India as a new emerging place, which is intended to be sort of on par with the best on the planet. And while people have looked at Gift City as a domicile, perhaps for funds, said, why can't this be also potentially a very new and attractive domicile for startups, whether they're focused on India or not, right? So that was the sort of background behind the thought process. And as I did some more research, it occurred to me that sometimes incremental changes cannot get you all the way. And maybe we have an opportunity here to start with a blank sheet of paper and build just the right structure, which ensures that companies can be primarily domiciled in India and yet at the same time get the benefits of being either domiciled in India or not.
That's pretty interesting, and I wanted to also discuss the concept as well of, this reverse flip, whereby a recent trend that you've spoken about of a lot of companies that are set up in Delaware and Singapore, and then when they approach the IPO scale or size, they want to IPO in India. So you believe that Gift City could actually become a simpler way for these companies to what you call reverse flip. Walk us through that.
Yeah, so today what happens is that when companies are set up, right, when these are very young companies, they're still figuring out what their business is, the product, the business, the target markets, all of these are sort of unknown, right? And so companies sort of take a best guess. In some cases, it's clear India is going to be the primary market, but in other cases, that's not the case. And so that's led to sort of the question of, if we are going to be a global company, then we should be set up properly right from the beginning. And then over the course of several years, you realize in some cases that India might be the primary market and perhaps the only market, right? So companies like PhonePe, for example, that when they started out set up in Singapore, But over the course of several years, I've realized that India is the primary market, right? And what happens is that it becomes very difficult at a later stage because there are lots of IP that's been created and a lot of value that's been created in the company. And now when you're trying to flip back into India, there is an exit tax problem in the country that you had incorporated, and then there is an entry tax problem in the country that you are flipping back into, right? Now, there isn't really any value that has exchanged hands. It's just that governments, of course, want their fair share, and the startups are not necessarily looking at it from, trying to avoid any taxes or anything. It's just that they're just figuring out where their business is. So Gift City now creates sort of an opportunity where it is kind of India, but it's also outside India. And because it is deemed as an independent jurisdiction. And so what I was thinking was, what if we allowed a company that may have been previously incorporated in Delaware or Singapore to just replicate itself in Gift City in a, maybe there's a one-time window of opportunity that's provided for all of these companies, and not have to go through the major sort of taxation impact that it's going to have, and then give companies in Gift City the opportunity to list either in India or in overseas markets as appropriate for the business. There are substantial amount of benefits for India. For example, a lot of these large companies, they raise hundreds of millions of dollars, sometimes billions of dollars, right? And during the course of their businesses. And all that money is actually stored in their overseas bank accounts, right? Because they only bring down to India the money that they need to spend at the time when they are spending it, right? But by having it in them in a domicile or re-domicile in Gift City, now the money will be in the coffers of the Indian banks, and the companies will still get the flexibility of retaining the money in dollars or in rupees as they see appropriate. So that's these are some of the other benefits of using Gift City as a way to and reverse flipping as a way to jumpstart the move to Gift City from overseas jurisdictions.
Yeah, and it would be crucial or fairly critical to ensure that it's going to be a complete digital experience, right, along with the ease of doing business. Do you think that there's hopes of that happening, given that we seem to be moving in that direction?
Yeah, I used the term digital domicile the other day with someone. And look, I think anything in the future has got to be digital, right? I think India has invested, and we are really at the cutting edge of all things digital, whether it's on the consumer experience. We just saw UPI nearly hit 8 billion transactions in the month of December. The whole company opening experience, electronic signatures, all of these things, we are way ahead of where the West is in many of these areas. So if we are starting afresh with a blank sheet of paper, of course it should be a digital domicile and a truly digital online experience. By the way, I will confess that there are a lot of the devil is in the details, and it will be challenging to do. It's not going to be a very straightforward thing, but I think it's a huge opportunity that we could capitalize on.
Okay, fair enough. But just moving right on, there is that big worry looming large when it comes to the funding winter that we've seen take place in the year gone by. The tech venture ecosystem in particular has really borne the brunt of that. I want to understand what the outlook is going into 2023 and how different really it's going to be, and in particular for seed capital stage companies in going into the next year. Are they largely going to be undeterred or unaffected by the funding winter?
So the reality is that any startup gets built over in a 7 to 10 year period. Any successful startup, very rarely do these things happen in a shorter period of time. So what ends up happening here is, if you think about economic cycles, every startup will at some point encounter difficult days, right? And what has happened in 2022 is it was perhaps a couple of years overdue, and has probably happened slightly more harshly. But clearly, growth stage capital, which used to reward growth, is now saying we need profitable growth, and it's okay if that growth isn't as rapid as long as it's sustainable, right? And I think that initially got reflected in the public markets, especially the tech public markets. And private markets, respond, they typically react a little later because the private markets are not, continuously liquid, right? By definition, you're only raising at certain points in time. So I think what happened last year was every company in the startup ecosystem that has made it through last year has restructured their plans, has restructured their growth to be much more predictable, to be much more sustainable, and where capital is now back to being a tool rather than a weapon, right? And I think that we had some bad habits creep into the system. So I think last year was a year of sort of stabilization and sort of reorientation. 2023 is a fresh new year. As a seed investor, we were very active in 22 as well, right? So we did a lot of investments, a lot of new investments. We typically do 4 to 6 a year. We continue to do that pace. And I think 23 will be no different for us or other VCs as well. Yeah. So if I were to look at it, if you look back historically, the best companies get created during such periods of time. So actually seed is probably the most exciting time for an entrepreneur because there is access to capital. A lot of the VCs have raised large funds. And this is the best time to start a company because from here on out, the expectation is it might be slow for some time, but then it is going to accelerate up, right, in the foreseeable future.
Okay, fair enough. Now, let's focus in particular on Prime Ventures Fund as well. It's spread across sectors like fintech, SaaS, consumer, B2B. Sanjay, what's the outlook when it comes to what's going to be the most, or one of the most promising themes going into the next year?
Yeah, so we are investing out of a $120 million fund, which we raised in 21-22. So we're still very early in the fund. We invest typically with the first institutional investor or amongst the first institutional investors. Our ticket sizes are between $500K and $2.5 million, that is. And our focus areas, we've been one of the most prolific fintech investors, perhaps before the term existed, and we continue to be very active in that space. The second big opportunity that we're looking at is, of course, SaaS from India, and we have quite a few companies in that sector. The third thing that, my partnership with he and I had the privilege of being involved in the Aadhaar project right from the beginning. And we're big believers of the whole India stack, the digital public goods infrastructure we have in India. And we're starting to now see more and more businesses how should I say, domains getting digitized, right? As whether it is in the B2B sector or it's getting technology as a means to solve some of the problems in rural India, across agri sector, supply chains, forward supply chains, and we will continue to be very aggressive about investing in these three areas. So there are a few new areas emerging. So we have a company called Dozy in the digital health space, Bolt in the EV space that's doing the two-wheeler side of things. And we have another company recently we announced, HitWicket, in the gaming space. So these are also new areas for us that we're looking at. And we're quite active in all of these.
Okay, fair enough. Just wanted to understand as well what your outlook is in terms of how you're looking at the overall funding trends and even the kind of dizzying valuations that we've seen. Yesterday we were having a discussion about how now a lot of investors, retail investors, are going to become a lot more cognizant about profitability when it comes to companies, and real cash flows are going to be crucially eyed. Do you think that we are going to see that shift happen, especially for companies that look to make it to the public markets?
I think there are two things here. One is, absolutely what you said is true in the public markets, and companies are now much more cognizant. Given that a lot of the growth stage capital in the private markets has sort of temporarily, paused or not, or even gone away, I think what is really satisfying to me is that entrepreneurs very early in their journey are now thinking, okay, how do I get to a good public market listing, right? So in the past, we used to celebrate the unicorns and what have you. I think founders are now saying, well, maybe, and we have a portfolio company called Traction, that recently went IPO at a less than 100 crore revenue and a valuation of around the same, right? So, but they're profitable and they're having steady growth. and the public markets, their IPO seems to be holding up pretty well, right? So I think what will happen is over the course of the next few years, maybe 3 to 5 years, while the earlier expectation in 21 was that India was going to see thousands of unicorns, it's more likely going to see thousands of IPOs in the 5,000 crore range, 3 to 5,000 crore range, rather than just these large companies raising round after round. But these will be very sustainable long-term companies, and as we have seen in the US also with the public markets, a lot of these companies, whether it was Facebook or Google or Amazon, they get 90% of their value after they go IPO, right? So we will start seeing a lot more disciplined growth of startups, and perhaps a lot more startups entering the public markets earlier than they otherwise would have.
All right, thanks so much then, Sanjay, for joining in and putting all of those details into perspective. Good to have you on Startup Central.
Thank you, and all the best again to all the entrepreneurs listening in. This is a great time to build a startup, and if you're sitting on the fence, my advice is just jump in and start doing it. Cheers.
Bite the bullet, just jump in. That's the advice coming in. All right, thanks so much for that.
Thank you.